Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Roberts, and welcome to Good Business San Diego, where we're talking about what's most important to you, your home, your family, your health, and your money. And the following portion is brought to you by Wilsey Asset Management. Today's hot tech stocks driven by AI technology have boosted the stock market to new heights, but what can we learn from previous boom markets when the bubble popped? A history lesson today from Brent Wilsey, president of Wilsey Asset Management. So the question is history going to repeat itself?
History always does repeat itself, and sometimes I say, well, it doesn't repeat, but it rhymes. And that's what you've got to learn from history. And if you don't understand history, you're failed to repeat it, and you're doomed. You're going to fail. And that's why I tell people, study this stuff. Yeah. I know some people say, well, I'm just going to buy NVIDIA because it's big chip maker. Oh, how great that is. You've got to understand there's other great companies in different time periods.
They're buying the name, they're buying the buzz,
buying the name,
right?
Yeah. And names mean nothing on the long term. Short term, they're fine. We got some names we'll go over with you. But again, it's so important that the Nifty 50 was back in the 70s. The tech boom and bust was, again, started in the 90s. And I tell people too, I remember Alan Greenspan, like 1996, he talked about irrational exuberance.
Right.
It took like 5 years for it to collapse, but it did collapse. And that's the thing, you don't know when the party's going to end, but I promise you it will end like it has with other cycles. And then the Nifty 50 again was in the 70s. I
like the expression that you wrote into your newsletter, which I was reading online. We were correct about the technology, we were wrong about what we paid for it.
Yeah.
Right?
Yep.
Explain that.
And that's so true for investors. They got the technology right in the tech boom. They were correct. The .com, the internet, the technology, they got that right. What they don't understand is the value of something. And if you don't know the value of something, what it's worth, you don't know when to sell it, and they'll just ride it all the way up, and then when it crashes, they don't understand why. And that's the biggest problem. They don't understand the value of these businesses. And yes, NVIDIA, Apple, these are great companies, but it appears to be, like the past cycles, they're way overpriced. They cannot match what the expectations are going forward.
And going back to this tech boom around 2000, then the bust, I mean, people are maybe losing sight of how badly people lost money. I mean, the NASDAQ was down considerable.
Yeah, it was down like 80%.
80%. That's considerable. Yeah.
And I tell people, if you're 50 now, you were 24, 25 back then, you didn't care. You didn't invest during that time frame.
Right.
And you think this time is different, which I tell people, it's different, but it's always the same. And they don't realize that if you're 50 now, and you get the same situation, which again, we're in a high market cycle, it's gonna crash, just can't tell you when. It may take you to your 60, 65 just to break even because of time. And then you add back inflation. Well, now that 100,000 you had in 10, 15 years, back to 100,000, now it's only worth maybe 80,000 because of inflation.
That's terrifying just to think about that.
Yeah.
If you lose 80% at 50 and then you're looking at retirement at 65, you're breaking even at that point?
Yeah. And people wonder why I'm so conservative, why I won't buy these technology companies, because I've studied. We're in a crazy time right now. I wish I could tell people, yes, on September 12th, the market's going to crash. No one knows. You can only, again, see these crazy periods and say, I'm not going to play that game. I'm going to invest in good quality businesses that I'm not overpaying for and collecting good dividends.
So take us back to the 70s and what happened with the quote-unquote Nifty 50.
The Nifty 50, again, started in 73, and it was down by 75. Your $100,000 you invested was worth $63,640. Now, okay, that's about a decline of almost 40%. But to get back to break even, it would take a 57% return to get back to that 100,000. And that's why sometimes it takes 5, 10, 15 years. And again, add to inflation to that, your 100,000 is not going to be worth 100,000. You've got to do better. And these things happen. And the Nifty 50, again, like right now, NVIDIA, Micron, these companies, oh, they're so great. Well, back then it was companies like Coca-Cola, IBM, Polaroid.
The big names of the day.
The big names of the name. And Sears, people laugh, oh, well, of course. Well, back then, Sears was the Amazon of today.
Yeah.
Polaroid was perhaps like the NVIDIA of today. Things change, and people don't realize that.
I just bought Sears last week. Bad thing? Well, we'll talk about that later. More information from Brent and the newsletter that I mentioned too at smartinvesting2000.com. We'll be right back.